Hey, yo, yo, yo. Hey, let me remind you that trading's risky, not appropriate for everyone. Past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Good morning. How are you? My name is Wayne McDonald. I am the Chief FX Market Strategist for TradersWay.com. Thank you very much for being a client of TradersWay.com. If you are new, hey, would you give Traders Way the opportunity to earn your loyalty and respect? The way you do that is go to TradersWay.com, set up a demo account, literally 30 seconds, and then when you're there, you can download MT4 and then check out their execution speed. Check out the spreads. Check out the swaps. Check out different types of accounts maybe you've never traded with before. You might want to try an ECN for the first time, or a fixed spread, for example, for scalping, right? And of course, variable is what everyone should have or does have, what I've always had anyways. So tradersway.com. Hey, and thank you very much for supporting our community. Your likes and your comments are very much appreciated. For example, I've read all your comments from yesterday. Give me feedback on the webinar style. We're always trying something new, always want to improve, right? That's the entrepreneurial spirit that we all have. We constantly have a drive to improve. That's what makes us entrepreneurs. And so hey, we tried something new yesterday. Some people loved it. Some people are like, eh. Some people hated it. I'm like, wow, really? That much? So emotional. But anyways, so emotional, So whatever. So I got your feedback and, I don't know. We'll just keep going, right? Cape Town. Cape Town's in the house, everybody. Be through. So today, dollar pairs, yen pairs, Swissy pairs, gold, oil, and whatever you want. Because you're the boss, I'm just a humble currency trader. So you can see, made some pips back yesterday. Cool. So still pretty much the same thing going on. Some yens, some Swissies, some exotics. It's all working out. Cool. I was thinking about a sort of a personal challenge. I don't know if I'm going to take it up yet, so I haven't quite decided, but I'm thinking about doing like an exotic trade that that could, let's say, produce my entire goal for this account. Wouldn't it be great? See if we can make a big exotic trade that we can sit on for a year. Thought it'd just be fun. Anyway, so I was playing around with the idea anyways. Cool. So Mr. Highfield said, Kiwi Swissy just got out of a really nice trade. Not sure if you're out soon. Okay. Let's take a look at that. It's always a good place to start. I got to do my Swissy. Okay, let's see. Did you get out early? So I'm short here. I'm short here. La-di-da-di-da. Look at the roll reversal. Wait for it. Oh, snap. Are you serious? Oh, for sure, eh? All right, so the question is, did Mr. High Volt get out early? Well, we don't have opinions. We only have technical analysis. So let's throw down swing trading confluence template. And no, you did not get out early. That is the projected low. Okay. Yeah, that's the projected low. So beautiful trade, Mr. High Volt. So the reason for it, like, oh, gotta get my drawing tool. Come on, drawing tool. While I boot that up, ask yourself, what is the pattern that we're trading? Okay. You should be able to see a front run and an extreme target. So the new iteration of my day trading tool now says conservative target, aggressive target. A nocturnal black, I don't know. I don't know which ones you're talking about. Probably not, maybe, but it's $5, so why don't you try? It's $5, dude. So honestly, I don't remember. It's $5. All right. So let's do this. Okay. Based on an entry up in there, got to go blue now. Okay. Based on this entry, you have a conservative target and an aggressive target. So as far as I'm concerned, Mr. High Volt, if you sold up here, you got the full Monty. Okay. Now, what if that wasn't your trade plan? Then I got to go in a little closer. Okay. Got to go in a little closer. Beep. Let's do maybe an hourly on this one. If you shorted here, like I did, okay, that projects a conservative target here and an aggressive target here. So that's why I have two trades on this, right? You see that? This predicts this at best. This predicts this at best, right? So did you get out early? No. Shepard says, what happens when a currency gets too strong? There is no such thing. Okay? There is no such thing. There isn't too strong. It just is. Right? There's like, as a human, you could be too tall. You can't fit in cars. You can't fit in airplanes. You can't fit, Shaquille O'Neal is too tall. And he's a big dude, so he's probably too big, right? So on and so forth. But too strong. Remember, there only is. So the value of the Swiss is the value of the Swiss, okay? If it's too strong versus Kiwi, maybe there's something else that's strong. Let's say USD is strong at the same time, or JPY is strong at the same time. And they would not be too strong against Swissy because they're also strong like Swissy. So it's all relative. Okay. Mr. Highvolt said, I did sell between monthly M3 and monthly pivot. Oh, sort of in here. That's okay if you were trading this way. Okay. The problem with that is then you should have exited last week because that's a weekly and then re-entered here, which is a new weekly. You see what I mean? I got a question here. Gorkiev. Swissy yen. Your opinion when it fall because of the sell setup in regard to Elliott Wave, Bollinger Band. So I don't trade that pair because I'm a macro trader. So I'll say it again just so everyone knows. Because I'm a macro trend trader. Trend trader. I would never trade Swissy yen. Now, I understand it moves. That's not what I'm saying. What I'm saying is macroeconomics generally impacts these two pairs the same way. So if it's risk on, these two pairs weaken. If it's risk off, these two pairs strengthen. And therefore, I'm kind of screwed. There's no one reason to trade them together, okay? Now, if you're trading relative strength, which is completely different from my style, then you would trade it, but that's a pure technical play. You see what I mean? See what I mean? Yeah, cool. So you can trade it, but I don't. Now, there's one that I like to watch more than others, and that's JPY versus dollar. Okay, so I won't look at Swiss franc. I won't look at, yeah. Anyway, so I'll look at this. Let's just put it that way. Let's be positive. I will look at this because of the dollar. Okay? Now check this out. You ready? Let me ask you, first of all, what is your opinion? Do institutional professional investors trade with pivot points? That's the first question. And then second, let me show you something. let me show you something nice. I got to get away from this. Let me show you, let's just do it from here. Let me show you something nice. So let me simplify this. Let's just clear it out. Okay, let's just clear it out. Check this out. Ready? Okay, conservative projected low, aggressive projected low, aggressive projected high. It's a pretty amazing coincidence the way we're playing off these prices, don't you think? Now, does anyone here remember when they traded with no monthly pivot points? You got anyone here remember that? Oh, so long ago, you used to trade with no monthly pivot points? Terrible, huh? What terrible dark times that was. What terrible, terrible dark times. Do you remember when you traded without pivot points? Yeah, so anyways, I'm sure there's a Michael Jackson song in there somewhere. But very interesting, huh? Brinsley says, I get better results with pivots. Yeah, well, because you can predict the top and the bottom of the market before it happens. That's very helpful, I think. No, it's not, Belle. That's actually pretty good. You were young and innocent then. Dude, I got it. What are you talking about? You're just not a music lover, Belle. All right. Okay. So what is the day trading plan? Okay. If you're a bear, right? So we got to reset this. This is the false rally move. So I got to do it this way. Hee-hoo! Yeah, Mr. Highvolt's got it. Mr. Highvolt nailed it. Hee-hoo! Yeah, cool. So there's your top. Lower low, lower high, lower low, lower high, lower low, lower high, lower low. Cool. And we call this the false rally of January. Okay. Coolio. And then what do we call this? The flash crash of January. I got to go further out. Anyways. The CAD is really affected by oil, so I got to leave that alone. Oh, here's the gold trade. Nice. Remember this one? I drew the moving average. The moving average. Do you guys remember that one? You were young and in. I did this. Hang on, I gotta go smaller. I did this for you. Remember? Yeah. Okay. Now you'll say, well, Wayne, you were wrong. It didn't touch. Okay, I know what you're saying. I know what you're saying. So imagine now it does this over the next 5 days. Okay? What happens to an exponential moving average over those 5 days? If this goes up, it'll do this. Yeah, it's going to move up and to the right. And then I'll say, hey, dude, why didn't you trade here? You're like, oh my gosh, I can't believe I missed it. I totally didn't see it. I wonder why I didn't trade it. Because you're looking backwards, brah. Okay? If you shoot at the deer while it's running, you're going to miss behind the deer. You have to shoot in front of the deer. Right? You got to shoot in front of the moving target, bro. Otherwise, your wheelage go hungry. Huh? So anyways, we'll see what happens here. Don't really know. That's right, but cool. Do you remember when we fell in love? We were... We can do this. Swing trading bullish weekly bias. It's a little low for the weekly. Do you remember when we fell in love? Okay. Cool. This is a buy zone. There's a buy zone. There's a buy zone. There's a buy zone. Whoop, 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 whoop. Okay. Anyways. So we'll see what happens. Remember, it's all about your plans, Stan. Oh, I didn't mean to do that. Just blowing the doors off that. And let's take a look at oil. Oil is much more interesting. And we're still hung up on the support pivot. Okay, this is your M2. This is where bulls would get back in if there are still bulls. Okay, I wouldn't short here if I was a bear because of that. Okay, a bear could still do this for sure. Okay, but I'm still thinking at some point I want to look for something like this. Okay. I hope we don't just get into a giant lull. But I think a lot of these things are going to start moving around the central bank meetings. So, for example, will the Bank of England cut? Will the Fed hold? Okay. That's right, Mr. Highvolt. And the 8 SMA, the 8 SMA is open. See? Okay, but it's in the training courses. It's also in my book. I label every single moving average. And I tell you, this one's simple. Everything else is exponential. This one's open. Everything else is closed. Okay. Prince Philip would like to buy gold. Yeah, there's a lot of gold moving around the earth right now. I think the big gold's moving over the counter and not through exchanges like this. And I think Bitcoin too. I think there's interesting conundrums. The risk on, risk off is one thing. Sort of the riots all around the world is another. And then there's this whole idea that we know, reasonably sure, which doesn't mean we know anything, but the world believes that the bull run, in particular in the United States, is mature. Okay. Hey, Peter, I'm sorry you blew up your trading account. Just stay positive in here. We want positive influences on each other, right? So check your negativity at the door. You're not the only one that's happened to. So you're surrounded by people that understand. But, don't pollute our temple either, right? So make this your sanctuary, your safe house. Yeah, but hey, we've all been there, man. I've been through so much internal strife that it's redonkulous. So again, I have all these ideas now that I'm not in school. Like, I'd like to teach you guys not just to be experts at technical and fundamental analysis, but I'd like to teach you how to raise money and start a fund and do the business side of Forex and all this kind of stuff. And I'd like to do the book club so that you can get a true economic education. Like, I would like to teach you to be smarter than most people with economics degrees. And you say, well, Wayne, that doesn't make sense. How could that possibly be true? Well, think about how most people learn. And I mean the other 95% of the world. What do? They go to a university, they bang out a bunch of classes, and they get a piece of paper. All right, so they can do the math, right? They're like, they can knock out cap M calculations and stuff like that, right? Great. Well, that's more finance, but let's say they understand monetary policy. Great. Okay? Great. But do they understand what money is? Do they understand what property and ownership is? Do they truly understand the grassroots of capitalism, and not just from a capitalism and democracy and all these newer ideas for humanity? I mean, they're only a few hundred years old. Do they understand where these ideas come from, and more importantly, why they arrived? No, they don't. No. They can just spit out formulas, right? You could just get an Excel spreadsheet with the macros already popped in, and boom, you're done. You don't need somebody that just can spit out formulas, right? But do you understand how we got here, and that where we are now is flawed and will need to be fixed? So you have to understand where we've been, where we're going, where we are now. So like I had mentioned several weeks ago, like Milton Friedman, the idea of governments you need to get rid of governments, you need to get rid of central banks, you need to get rid of and just let capitalism rule. Well, that died with Greenspan. How long has it been since Greenspan has been in charge of the Fed? A long time. It's been 15 years now, right? I mean, there's people that still spit this out. Now they're boomers, right? Okay, boomer. Right? Oh, the Fed's bad, it's all a scam. Okay, boomer. Okay? Right? They have opinions on the economics and finance and the entire global market, but they can't install Facebook on their cell phone. Right. So those ideas are long gone. So where are we going in the future? But you have to go back. So like if I did a book club, I would start you 1,000 years ago, and we'll go from 1,000 years to now. Okay, and you'll have something that most people never have. But now you'll understand maybe why the markets behave the way they behave, right? So anyways. Okay? So anyways, so what was I going to say? There was one other, I was going to add to that. So I was going to do this and do that. Oh, it'd be interesting to do a pure psychology like group almost. Or like, I don't know if a course is enough, right? It'd be interesting to have like a pure psychologically focused group. Okay? Be very interesting, like, for example, to bring in, let's say, someone from athletics, from the athletics world or someone from the military world to come in and talk about discipline and sacrifice. Like, they don't know anything about trading, but they know if you lack discipline. They know the consequences if you lack discipline. And they know how to build it up if you got personal integrity, which I believe you have, right? So it'd be like, why don't we do stuff like that too? You know, like, oh my God, let's do it. Let's talk to Olympic athletes about sacrifice and discipline and execution and drive for perfection all the time, not most of the time. You know, so anyways, like, oh my God, there's so much we can do. Yeah, right, Stephen? Now, Stephen, as you do this, here's my thought right away. Spend time psychologically, because you got to, like, you have to shape your thought process, right? Try to tie in what you're doing for the Ironman with your trading. Like, really cognizantly focus on, not only are you teaching yourself discipline and carrying out discipline for Ironman, but then put this toward your trading too, so that, you know, you're manifesting some sort of carry. Like, you're not just disciplined as a runner and as a biker and as a swimmer, but as a trader and other things as well. And try to focus on that too while you're doing those things. Hey, Max, let's just say I'm a busy person, but you're on my mind. Let's put it that way. Right? Well, you meditate, but I don't know if you meditate on, like, how does running every day make you a better trader? Or something like that, right? Okay, so anyways, that's where we are there. Okay, Goodbye, Max. Okay, let's move over to, yeah, I was wasting Max's time. No, we'll do that, Peter. We'll do that. So I want to continue. I don't think we got all the Swissies. There's clearly a risk off. Okay, cool. What can we learn from this? Long Solomon says, I want you to talk more about USD and how it correlates with the exotics. It doesn't. Okay? Macroeconomics does. And therefore, they will impact these two things differently. So I can tell you the correlation with US dollar, but I'd rather tell you why. It has to do with risk on mood for the entire world. Is the entire world comfortable with investing money? And by investing money, I mean take risk. Like, will a corporation build a factory? Well, in the United States, when we're in the trade war, how does a company make a decision on building, let's say, a new factory in Vietnam or China, but they don't know the trade policy between the United States and China, for example? They're like, well, we'd like to build this. It's going to take us 5 years and $1 billion, but we don't know what trade relations are going to be like in 5 years or even next year. So all these things get put off, right? So once those risks go away and investors, whether it's a corporate investor, whether it's a trader, whatever, right? When money can be deployed because the potential returns are higher than the risks, okay, then we get a certain outcome. We get a global money flow around that. You following me so far? So, with that in place, and Nike decides to build another factory in Asia, right? Or whatever. Let's use that as an example. Then the money leaves Oregon. They're out of Oregon, right? Beaverton, I think. Anyways, money leaves America and it goes to Vietnam. What happens to the dollar? It weakens. It leaves the United States. Okay? But what if we look at this globally? If business around the world can trade freely, meaning there is no exogenous risk. There isn't a trade war between two countries created by two countries. If it was just business trading with business, they wouldn't have a problem, right? They would just do business with each other. So in a sort of a free world, places like the United States would have a weak currency because they're investing abroad, okay? Places like Australia would have a strong currency because people are buying their commodities. Okay, you see what I mean? So that's a risk on. They're willing to take risk. People are willing to put money on the table, assume risk for some sort of potential reward. Okay? And when that happens, dollar weakens, but then think about where the money flows. Sometimes it'll flow to Australia for people to buy, for countries and businesses to buy their commodities. So for example, in a risk on mode, Aussie Swiss franc would go up. Why? Swissy is a funding currency. Okay? And people will take money out of their Swiss bank accounts and buy iron ore and coal to make steel in China, for example, or wherever, right? And the Aussie dollar would go up, Swiss franc would go down because they're removing money from Switzerland and putting it into Australia. Not really into Australia, they're just buying Australian stuff. So they give money to Australia, and Australia gives them a commodity like iron ore. Okay? Cool. Well, there's other reasons to invest as well. And in situations where there's risk on, some people would like to catch a high yield. So let's go here. Oh, this is my trade from yesterday. Nice, right? So here's an example. Here's money flowing to South Africa from the United States. Well, that's not a safe bet, is it? Even, especially to people in South Africa, they'll tell you, my South African brothers and sisters, they'll tell you like, oh, this place is crazy, right? This place is crazy. It's awesome, but crazy. Not crazy awesome, it's crazy dot awesome dot, right? And you're assuming some risk, faux show. So in a risk on mode, money is leaving the United States and for some reason going to South Africa. Okay? Maybe to build a factory in South Africa. Maybe to buy South African gold. Maybe just to catch a high yield. Okay, cool. Yes, Benjamin, Thursdays 11 Eastern. The bias part, you should probably take the fundamentals course. Because I'm not there to set your bias, because I can be wrong. I'm not responsible for your bias, right? I don't know if I'm right, so how could I be responsible for you, right? So, and in fact, I don't actually care. You can flip a coin and you'll do fine. Okay? We meet online, Mr. Bell? Swing.fxbootcamp.com. Right? So if you flip a coin and you say for 2020, you're, I don't know, a bull on the US dollar. Great, done. You'll do better just because of that. Because now you know what to do every single day, every single week, every single month for 2020. And you either get a proper setup, which is just technical analysis, right? Or you don't get a proper setup. It's just technical analysis. So if you don't understand that part, you need help with technical analysis. So like Swing Trading Group doesn't teach you technical analysis. Swing Trading Group doesn't teach you fundamental analysis. We get together as a group and I help you plan your trades. But if you're like, well, I don't even know what to do, Swing Trading Group's not for you. You need to learn how to plan. You're going to need to know technicals for sure. And then we're going to have to layer on some fundamentals and you can start practicing making your decisions. But making the decision is the number one thing, not if your decision is right. You have to understand. Write this down. Okay? Your profit does not rely on you being correct. Your profit relies on you being consistent. Okay? Oh, sure, trade. If I do the swing trade, the day trading thing, it'd just be for a week. I can't commit every single day. But that would be to show the Swing Trading Group. Not only do we do monthly trades, we do weekly trades. I thought for a week we could just bust out and do a day trade, a day trade, a day trade, day trade, day trade, done. Just to show. Just standard Fibonacci. I don't know anything about those other pivot points. Those are all people trying to sell you an indicator or a strategy or a course or something. I just use, you know, you have to understand, I guess maybe, so I've been trading for 15 years, a little more than that. And I probably have used pivots for 12. And so there were just pivot points. There were no other things. Now, Woody is the guy that created CCI. So I think what he's done is he's gone through and he added some Woody's pivot points to his Woody's CCI, to his Woody's group. And now you're just buying a Woody's product. Okay? That kind of stuff. And other people created those other things, right? Oh, if that's what you mean by the day trading group. I wouldn't call it a day trading group, but it's a performance coaching program. Okay. So anyways, guys, I can see some people are here that are new. I want to tell you something. You need to simplify absolutely everything. So all these things like what form of pivot points, does the 3-6 number work great? Like the no, you gotta, you've been fed so much crap that we need to strip all that out, honestly. Okay, I said it yesterday. I won't do it again. I'm getting complaints in the comments that it's the same crap over and over and over again. Well, I see this new people come in every day and they need the same advice. You need to learn price action, absolutely 100%. Then, if you like the way I trade, which is a combination of fundamentals and technicals to put me into trends, I really highly recommend you'll know pivot points. In fact, I can't trade without pivot points because they're a leading indicator that tells me what's going to happen tomorrow, what's going to happen next week, what's going to happen next month. Everything else is fluff or worse. Garbage, misleading, unnecessary, redundant. So like, for example, you could even kill all my moving averages. If you don't like all my moving averages, great, kill them. Okay? If you don't like all these other tools that I have on this template, kill it. Get rid of the channels. Great, delete. Okay. Okay. And you get a scenario like this. In fact, I already have it set up. Where's my naked charts? Okay. This is what I recommend you use. Nothing else. Which components are in price action? Price. And patterns, if you will. Okay? So there is a training course at FX Bootcamp because I absolutely think you have to have it. I will literally say this to you. If you cannot trade price action, you will fail as a trader. I don't even think it's my opinion. If you don't know how price moves, how could you possibly have consistent results? I don't know. I think it's impossible. That's my opinion. Okay? That's my opinion. If you don't know how price works, it's just the flow. It's just the flow. If you don't, I cannot fathom how you could possibly trade. And then the next thing is, do you think you'd trade better if you had a good idea what tomorrow was going to do, or next week was going to do, or next month was going to do? Yeah, I think so too. That's logic, right? Now, fundamentals have to do with what I was talking about before. Why or when does a country like the USA buy stuff from Australia or Canada? Okay? See what I mean? I think you need to understand that. Common sense business on a global scale. When do Americans want to buy more stuff from Australia? When do Americans want to buy more stuff from Canada? When do Americans want to buy more stuff from China? When do Americans want to buy more stuff from Japan? This is the one question I ask myself all the time. Okay, what do you think happens in these scenarios? Okay, and then what happens when they don't? Where does the money flow? Now, these are very basic questions. They're quite a bit simplified, and I'm okay with that. Because either money is flowing out of the United States or to the United States. Now, in special cases like the Japanese yen, it's such a unique case that it's not just the USA doing business with Japan, it's everybody in the world doing business with Japan. Etc., right? Pound, euro. Okay? So there's special cases. Swiss franc is also a very unique case. For example, it doesn't have a true fiat currency. 40% of Swiss franc is backed by silver. So the United States can, if you want to call it print money, they can print money forever and ever and ever until the US dollar is worth zero. Switzerland cannot just make more Swiss franc because they need more silver. Okay? You see what I mean? So guys, what I'm saying is if you can understand business, and I am a businessman, okay? Okay, so money is either going here or it's going there is the way I'll look at it. Very simplified, but it works. So, if you understand why money is either coming to the United States or going away from the other, right? Understand. If you understand that logic, like why does one country buy oil from another? Why does China buy iron ore and coal from Australia? Well, they would buy iron ore and coal from Australia for one of two reasons. They want to make steel, or they're trying to fire their electrical power plants that are coal-fired, but they're trying to do it with cleaner coal. Either way, when they need more energy or they need more steel, it's probably because of economic activity inside of China. And there's so much economic activity inside of China that their domestic supplies, and they have lots of it, although their coal is dirty, that they're willing to pay a premium to bring in Australian iron ore and coal. Okay? Because they need to make steel faster, and they can't rely on domestic supplies. Okay? In that case, how can we anticipate that demand? Well, you look at things like factory capacity and utilization data. You look at inflation. You look at consumer spending. Okay? And you can say there's lots of economic activity in China. And in fact, the rate of change is positive. Therefore, business is good. Why? Because Americans are buying Bart Simpson t-shirts and foldable lawn chairs for the beach, right? From China. There's factories making all this crap. Great. So then America must be doing good. You see? So if you understand the flow of money, money is going from the United States to China to buy stuff that needs to be manufactured. But now the manufacturing industry needs iron ore and coal and steel and all these things, right? So now they're buying stuff from Australia. Now we got a global money flow here. And you can make a decision like, I want to do this with money, or I want to do that with money. And the cool thing is it's one or the other. It's very binary. Risk on, risk off. You understand? Okay. What Fibonacci numbers you use, or what type of pivot point should I use? A Woody's pivot point? Oh my God. Noise. That's all noise. It's all useless garbage. Okay? You start with a general understanding of, is the world healthy or not? Where does the money go when it's healthy? Where does the money go when it's not? All of it. All of it's in the book. Yeah. Can it still be considered up to date? Generally so, yeah. I mean, I give examples of like how to analyze PPI data. Now, the PPI data is 15 years old, but the reason you analyze it hasn't changed. Okay? So, do you understand, like, all these other things are distractions? I want you to understand how money works, how the world works, how the economy works, okay? And it's not overly complicated, okay? Now, the second part is you need to know some technical analysis. But like all this thing, like, again, like the Woody's pivot, that's all garbage people are trying to sell you. Okay? The number one most important thing is you've made a decision. Risk on, risk off. Okay? I'll tell you why. Because then you could do this. You're done your planning. It's over. That's how quickly it is. You know what to do before you do it. If you log into your charts tomorrow and you're like, I wonder what I want to do today, you've already lost all your money. Okay? So, Don't get distracted by all that nonsense, okay? Would you please promise me that? I don't care what tools you use. Go ahead, use Woody's pivot points. I don't care. It's not what will make you successful, okay? I don't care what moving averages you use. I don't care if you prefer Elliott Wave over something else. You're like, I don't do price action, I do Elliott Wave. Great, doesn't matter to me. You can be very, very, very successful. Why does the technical indicator not matter? Because it's the decisions you make that matter. Okay? But let me tell you something. You're the expert, you're the professional. People will pay you money for your advice. And this is what your advice is. You can sit down and logically tell somebody what is likely to happen in the future, either the near future or the farther out future. Okay? If you're able to accurately predict the future, then you just use some technical analysis to say, oh, well, I'm a bear here, but we're at support, so I don't sell. There's nothing difficult about that. You understand? For example, let's say you want to sell this. Okay? We know we're looking for price action like this, right? Cool. It's not that complicated. So what if instead we're doing this? Well, don't sell it. It's not hard. But the money, right, your value is making the decision. And here's the funny thing is nobody knows if your reasoning is correct. Nobody knows if the analysis you've done makes any sense. But what we do know is markets are either going to go up, down, or sideways. So at the very least, you have a 33% chance of being right, even if you're crazy. Okay? So for example, I'll give you a far out example. I've heard of two stories where traders make decisions based on the rotation of planets around the solar system and the rest of the universe. I'm not saying that in of itself is crazy. I'm just saying it's very unusual. It probably makes tons of sense, actually, because it probably impacts weather, and weather impacts economies and all that, whatever. Okay? The other one was a trader that made his decisions based on the migration of African elephants. He would measure the pattern. So, for example, if elephants have to go farther for water this year, it means there's less rain, which might mean there's more rain in Australia, or there's more rain in the Ukraine this year. There's going to be a shortage of wheat, and you start buying grain prices. I don't know, whatever. But the thing is, they're committed to the decision-making process. Okay, you understand that? They're committed to the decision-making process, which is the same of flipping a coin. Okay, now, if markets were balanced, let's say, 33% of the time you would have an opportunity that was obvious for you to take a shot and make money. 33% of the time, it's wishy-washy opportunity. You might take it, you might not. It's not clear, but it's there, but it's not as perfect as you'd like. And then 33% of the time, it's absolutely perfectly clear. There's no trade opportunity whatsoever. You understand? You look at your chart and you're like, no, there's nothing there for me. And it's done. It's so obvious, right? Because if you're a buyer, there's only uptrends, downtrends, and sideways trends. And you're like, you definitely are buying uptrends because you're a buyer. You're definitely not buying downtrends because you're a buyer. And you might buy a sideways trend because maybe you don't know it's sideways yet, or maybe you think it's going to break out, or maybe it's worth the shot, or maybe on a smaller time frame you can pick up a couple of pips. But it's a hardcore maybe. But do you understand, like right off the bat, you're probably better doing that than what you've been doing. Now, let me take it a step further. The markets are not balanced. They're likely trending. Like I said, risk off or risk off, right? Risk on or risk off. There's a trend. There's an underlying reason. This is Forex, not Fortnite. There's an underlying reason. Things like global money flow, like global money supply created by the central banks. You see what I mean? So with that in mind, the markets are generally risk on or generally risk off or generally neutral, but you should be able to figure that out too. But if you're a bull, which means you're pro risk on, and the markets seem to be pro risk on as well, on this particular time frame, because of the particular decision you made, you're like, I'm positive on global macroeconomics. Done. You're a risk on trader. Markets are risk on. You're going to do much better this year than in other market conditions. You see what I mean? After that, I don't care what technical indicators you use. That's amateur. I really don't care if you use 100 indicators or 0. At that point, if you're a bull and you're in a bullish market and you're buying dips, remember I said the number one thing you have to have is price action. So you're in an uptrend and you're buying dips. You're going to make money. It's like a definition. But you don't need any indicator to do that. So why are indicators helpful? Well, you look at something and you say, well, based on my technical analysis, I think this is going to go up, or you say, I think this is going to go down. And you already know if you're a bull or a bear. So everything else gets pretty easy. You know where to buy. You buy at support. Where's support? That's just technical analysis. Or you sell at resistance if you're a bear. Well, that's easy. That's just technical analysis. But if you don't know what you're doing, before you even open up the chart, you're like, I wonder what I'm going to do today. You've already lost. Why? You're adding no value. If you're a professional fund manager or want to trade like a professional fund manager, you have to have a bias, an opinion. Where are we going this week, this month, this year? It's all the same answer. Where are we going in 2020? Ask yourself, where is the market going in 2020? Map it out. Is the stock market going to crash by the end of 2020? Yes or no? Is the stock market going to be higher at the end of 2020? Yes or no? You can't answer that, you're not going to be a good trader. Seriously. Okay? I don't care what the answer is. That's the thing. I don't even care. It doesn't matter. It doesn't even matter, because do I know what the market's going to be like in 2020? No. Do you know what the market's likely to be at the end of 2020? No. Now, do you have your opinions? Probably. You're like, Trump is going to absolutely lose. And someone else is going to say, no way, man, Trump is not going to lose. But do you think a new White House or the same White House will have some sort of impact on the markets? Yeah, I do. Okay? Cool. So now it comes down to an opinion. What's your opinion? And then you can start giving me your facts, but I don't even care. Because at the end of the day, you don't know, I don't know, so why would I care? The thing is, if you care, you're like, there's no way Trump is going to win. Trump is a scumbag, liar, thief, he's dangerous, he's the worst president we ever had, and he has bad hair. All right, good. You got all your reasoning. Right on. So now you're risk off. So now every single day, every single week, every single month till the end of the year, you're looking for selling opportunities. Okay? Will you get it every day? No. Will you get it every week? No. Will you get it every month? No. But when you get it, you're going to sell it and make money. So, like, what pivot points you use? Is my SMA open or closed or simple? Who cares? It doesn't matter. That's what I'm trying to get across. You use those tools to analyze. Very simple. What does my book tell you? What direction is the market going? That's why we use moving averages. Right now, the market's up on this time frame. Technically speaking, right now, the market is bullish. Okay? Done. Done. That's it, by definition. So is this a good opportunity to sell? No. No. Okay? But the speed of the market changes. It was super fast here. Now it's slowing down. What does that mean? Oh, it will make us vulnerable. This was super aggressive. Now it's less aggressive, makes it more likely for a double top. And then we work our way down. So if you happen to be a bear, this might be a good opportunity next week to start selling. You already know the top, you already know the bottom. Done. Okay? So imagine now, over the next 52 weeks or 365 days, all you did was look for bearish opportunities. Why? Because you believe Trump is going to lose the 2020 election, and as we get closer and closer, we're going to find out he's going to lose. The more you see on TV, the more polls you read, the more research you do, everything tells you that he's going to lose. In that situation, we don't know who's going to win. We don't know who's going to be in the White House, who's going to be in the cabinet. Are they crazy psychopath liberal communist scumbags? Maybe. Or are they benign, ex-Obama people that are champions of let's change nothing, right? I don't know. But if you have these opinions, you know what to do. But the thing is, if we don't know who's going to be in the White House, but it's definitely not who was in the White House, now we definitely have an unknown. Markets don't like unknowns. Stock market's going to come down. How much? I don't know. Depends on who and why and what and all this. Okay? You see what I mean? So based on that one thing, we're going to have uncertainty. The market does not like uncertainty. Stock market falls. Okay? And the market becomes bearish. Risk off. Cool. Now you know what to do. Okay? Based on your opinion, you have a risk-off scenario. Therefore, every day, every week, every month, you're asking yourself, is it bearish today? And am I at resistance? But isn't that like, I talk about that. My whole book, Strategic and Tactical Forex Trading. What's your strategy? I'm a bear. Why? I think Trump's going to lose the election. The whole market's coming down simply based on uncertainty. Good. So what do you do today? What do you do next week? What do you do next month? I'm going to look for selling at resistance. How do you do that? Basic, simple, elementary, technical analysis. But the thing is, you know what you're going to do before you do it. You're going to get very, 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 very good at selling at resistance. The first question, as I say in the book, is the market bearish? Imagine you ask yourself this every day, every single trading day of 2020. You're not asking yourself, What should I do today? Oh, which way did London break out? I guess I got to do that too. No, what if you said, I'm a bear? So you open up your charts. Is the market bearish today? No. Don't do anything. Done. Take a walk, son. Go to the local museum and and volunteer your time as a docent. Or go to the local old folks home and sit there and listen to old war stories or stories about the Depression and set up their Facebook account on their cell phone. But do something valuable with your time. Sitting around like pissing around, scalping, trying to get 12 pips on a move that you can't even predict. It's not worth it, guys. It's a dream. Like, well, if I just flip another trade here, I can get my yellow Lamborghini. Get over that. You guys even tell me to get over that. Well, I think it's a funny example, but how many Forex lifestyle videos are there on YouTube where like, look at me. I got a yellow Lamborghini. Boom. I did it all on my cell phone. Boom. You're like, oh my God. Okay, great. So how about this? You look at the market, technical analysis, either price action, pivot points, Fibonacci, Woody CCI, Elliott Wave, MACD, I don't know what you guys use, but you use some sort of technical analysis, and you're like, yeah, today, today is bearish, yeah, oh, for sure, eh? Great. So then number 2, you have permission to engage. Roger that, permission to engage. Oh, I should do it this way. Here's how you do it. Ready? I know I ran out of room, but I don't need much. Sell at resistance. Okay, done. I just planned out your entire year, son or daughter, friend, comrade, brother, sister. You understand? That's how you trade. That's how you make $100 bajillion and have a different Lamborghini for every day of the week, or at least just run a successful business, whatever floats your boat. Right, bro? Yeah, drop the mic, boom. But you know I'm telling the truth. How many people know that I'm preaching the truth here? Okay? Yeah. So I don't care if you use MACD or not. I have no emotional attachment to MACD. None. I have no emotional attachment to stochastics. I have no emotional attachment. And these are things I've been showing people for years. Why? Trying to give them a basic tool to say, is the market bullish or bearish, right? Like that's straight out of the book, right? Strategic and tactical Forex trading. What's your strategy? I'm a bear. Well, is the market bearish? No. Good. Do nothing. But then here's the other weird thing. That's why, I know I was boring Max and wasting his time, but this idea of a psychology group. So why don't you do it? Now that's a much more interesting question, right? It's weird. So I was only in the U.S. military for 1 day. So I tried. For those that did serve, I tried. But I'm sure there's a scenario where you're going through boot camp and you're going through your sniper school or whatever, or you're practicing kicking down doors and clearing rooms. You don't know how you're going to perform when you get there on day one, right? You get in country, boots on the ground. They're like, all right, boys, today we're going for a little hike. In fact, we're going to have to kick down this door and sweep this apartment building. There's probably some bad guys in there, but there's probably some friendlies. And you're like, oh, here we go. Sort of like joining the Navy and finding out you easily get seasick. Shoot! Dang it! Oh, should have picked the Air Force. Yeah, so like there's a psychology to all of it, right? You know how to do it, and then someone shoots at you. Yeah. So I don't know. So I think there could be a room for, not that I got it together myself, but if that was important to someone, we could work that out as a group. Okay? I got to finish my whole Harvard thing. I got to pick up my second degree and then move on.com. So if it's not likely to happen 2020, but I'm thinking about these things. Why not? Which means I can design them now. Okay? I could design them now and then 2020 launch and we already got some stuff going. So imagine I already had a group of 5 or 6 speakers willing to come in over a few months, and we had some books that we could read together in the book club, and you know, maybe we can do a conference once or twice a year or something. But anyways, it's just a thought. Right. Well, that's the thing. So who said it? Where is it? Then you're scared of heights. Brinsley says, then you're scared of heights. Now, I'll give you an example maybe that makes me think of when it comes to the psychology. My mother is scared of heights. Okay? And I was taught to be afraid of heights. Okay? True story. I was taught to be afraid of heights. So when I was a kid, I had an opportunity to go skiing. And when I got on the chairlift, I was scared to death. And I mean, you grab the safety bar, right? And you're holding the safety bar, you're leaning as far back, and of course you got skis on your feet, and you're like, oh my God. At first you feel like you're going to just slide right off, like somehow the chair is made out of Teflon. You're like, oh my God, I can barely stay on this thing. And then you get to a point, and I don't know if you've had this feeling at some point. Have you ever had the feeling of wanting to jump off? Have you ever been on the side of a balcony and you're like, oh my God, I can't be here because I feel like I'm going to jump off? I know for a fact some people used to do that. I used to live in a skyscraper. And I'd have people come out and they're like, oh my God, I can't go out there because I have this feeling of jumping off. So I know people react differently. But I can tell you, I tested myself and eventually I lifted the safety bar. You understand? And I was scared to death. Scared to death. I mean, hanging on. And I'm like, I'm going to fall off. I'm going to fall off. And it's it's like a 20-minute ride to the top of the mountain. I'm like, I'm going to fall off. I'm going to fall off. Well, I didn't fall off. So I did it again. I'm like, oh, schnauzer, schnicker, schnacker. And I'm hanging on like, don't look down. Oh my God, don't look down. Don't look down. My boots are so heavy. It's just going to pull me right off. And then every once in a while, the chair would stop and it would swing. And you'd sit there for 10 minutes while the chairlift was broken because some idiot at the top fell off and they had to stop the chair. So you're up there for 20 minutes sometimes an hour because the chairlift would break. But I think that might have actually happened. The chairlift broke. And I'm up there for a long time. Just standing, people are skiing by me and I'm stuck, 60 feet above the snow, like high. And after a while, I got used to it. And then you realize you're a poser. If you pull that down, people laugh at you. You're like, look at the poser, look at the tourist, right? So it got to a point where I had no fear whatsoever. Later on in life, as I had mentioned, I lived in a skyscraper with the most fantastic views of San Francisco you've ever seen. And in fact, in the foyer, I had a mural painted of the view, but in an artistic style, right? So you had Nob Hill, you had all downtown, I had views of the Bay Bridge and San Francisco Bay. Unbelievable, right? Absolutely multi-million-dollar view. Great. But it had sliding doors and a balcony. So like people would come visit. And some people were like, I ain't going out there at all. I ain't looking, I'm not, whoa. Other people are drawn straight through. So most people they go straight for the view, right? So I'd go in, I'd turn to the kitchen, and I'd open up a bottle of wine, and chow, whoever's visiting is out on the balcony like, fudge! This is amazing! I'm like, oh, really? Yeah, I guess so. Bloop, 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 bloop. Yeah, isn't that pretty? Look, over there's Nob Hill. Oh! Right? But then, people then look down, they're like, oh, I can't do that. Okay? And then other people have no problem. Some people are like, I can't be out there. Some people are like, I want to jump off. So then one of the things I'd test people is I said, okay, check this out. Lean over and then turn around and then look up. And they're like, oh, I can't even see you do that. Don't even do it. Oh, don't even do it. My point is, you can train yourself. I might bring in a buddy of mine who served in, I'll just say the military. I don't know if I'm even allowed to say the branch or what he did, but he was in part of the military, and he will tell you, he has told me, that the military has removed fear, and he's trying to learn fear back. Okay? He's lost. They actually removed the emotion of fear from him. He doesn't have it, but he probably had to give up some other emotions too, right? So he's trying to become human again now that he's not in the military. But it'd be interesting if I brought him in and say, well, how did they do that? And if someone that is fearful of trading, and when they place a trade, they start sweating bullets and double, triple guessing themselves. Like, as soon as they sell, they're like, oh my God, I gotta get up. Oh my God, it's going up. I think I should have bought it. What should I? Like, some people like instant panic, right? How maybe not to overcome it, but how do you learn to accept it and the consequences, right? I think that'd be interesting to bring in my friend. But see, there is no fear of missing out. That is a lack of work. The only thing you are missing out is that you didn't have something planned. So I can remove that. Okay? For example, if you have a plan, then you don't miss out. People that have a fear of missing out throw down trades with no plan. I can fix livefxbootcamp.com, right? The performance trading group. We can fix that snap. Right? We will fix that. Or you'll quit because you don't have what it takes. And that's not our problem. Not everyone can hack it. What can I say? Right? If you can't shoot straight, you can't be a sniper. That's all there is to it. If you don't put ammo into targets well, you're just not going to make it through sniper school. That's just how that is. And they're like, well, maybe you should go back to kicking down doors and, that's it. You're better at kicking down doors, right? So anyways, so that fear of missing out, that's an easy one to fix, focus, right? We can fix that. That's easy. For example, if you worked for me in a hedge fund, once a day you had to report to me and show me the 3 or 4 trade setups you have for tomorrow. That means every single trade will have a plan. Which means if you're right, you'll get some trades tomorrow. If you're wrong, you don't get trades tomorrow, but there's no miss out. You see what I mean? Like, there is no missing out. What do you mean missing out? You didn't have it planned. You meant like you didn't see it coming. Well, that's a whole different thing. Okay? Now, and Daniel says, oh, I think I have a fear of my wrong bias. That's easily fixed too, because we know mathematically your losses are small and your winners are big. So we can prove that even when you're wrong, you're going to lose money for sure. But when you're right, you're much righter. You're more right than wrong, right? And then we have to look at the percentage. Like, is your bias wrong most of the time? Well, maybe your bias is effed up, or maybe you're just going through a period like where, I mean, there can be 2-3 month stretches where you don't have many trades because your bias is wrong. So we might want to look at like, what was your decision-making process to get to that bias? Maybe that could be tweaked or refined or whatever, right? You know what I mean? And imagine this, Daniel, if you knew the math showed that on a longer run, like let's say over the course of 12 months, if you have 3 bad months in a row, it'll likely wash out. Because when you are right, you're going to make a lot more money, right? So that easily, maybe in 1 month, you wipe out 3 months of mediocrity, but then you got 2 more months of awesomeness, right? So like 1 month can fix 3 bad months. There's a saying in golf, and I think it was in Bagger Vance. As long as your every 4th shot is amazing, you can be a good golfer. Right? And I always thought that was great. Like, you can have 3 mediocre shots, but your 4th one is amazing. It just fixes a lot of things because you're like, you know, oh, he missed left. Oh, he missed right. Oh, my God. Right? Oh, he's like, look where his ball is now. And then all of a sudden, did he just land it on the green? Holy smokes, was that an amazing shot? Now he's got like an easy putt for par. You're like, what a save, right? Whatever. So, like, think of it that way. You can have 3 mediocre months, and then all of a sudden, boom, 3 awesome months. One good month erases 3 mediocre months easily. Okay? So anyways, if you knew that, that would dissipate over time, right? Well, I don't mean bad months, Javier. Let's say -2, but they know you're good for a +10 in there somewhere, right? But my point is the longer point term, the bigger time frame, the bigger point of view, like a business, right? A business has a 1 and 2 year, maybe a 3-year business plan, right? Or if you're Japanese, you have a 100-year business plan. But anyways, if you had a business plan, you're focused on meeting your objectives over the course of time. And no business says, our plan is make $100 billion next year. That's not a plan. That's not even a prayer. Okay? So what you want to do is say, okay, you can start with a reasonable, right, a specific, measurable, attainable, realistic, and timely goal for the end of the year, whatever that means. So let's say you want to double the trading account. Great. Now you reverse engineer all of that. Okay, so we know that's about 6% compounded per month. So now your goal is 6% a month. Average. Okay? So that means some are going to be 0 and some are going to be +12. On average, it's still, right? If it's, you see what I mean? in your goals, you're focused on achieving the more specific objective. So a business will have key performance indicators or key result areas, right? So like imagine them a strategy. Okay? So you got a business has the vision and mission statement, of course, and then you got, let's say, your key result areas or key performance indicators. And then each one is a strategy. So you might, sell this product, sell that product, Okay. Now, for product A is going to have objectives and goals, right? Distribution partners. Okay, so you want to expand distribution partners by 20%. Great. Who's going to do it? And when are we going to break it down over the, and who's going to follow up and who's going to measure it and all that kind of stuff. And then what's the next one? What's the next one? Next one, right? So you want to look at your trading that way. January, in of itself, okay, how many trades do you make a day? What is your winning percentage? What is your annual, if you want to do that, an annual bias, okay? And how well has this month performed with that bias? And you break it down like, what are you going to do in January? You're not trying to make 100%. You're not trying to make 10%, okay? What you're trying to do is be laser focused every day, every week, and for the month, carrying out these plans. If you're a bear on Aussie yen, is the market bearish now? And if so, where's the next level of resistance in which you can consider selling? So now you know your price, you know the strategy, you know your price. Then when you approach that price, drop into a smaller time frame and use some sort of like reversal pattern to confirm or deny the rejection at resistance. And now you're selling in a bearish market at resistance in the direction of your overall bias for the year, which I'm assuming you could back up with some fundamental nonsense of some sort. You see what I mean? Okay. Emil, I don't really care about phase one. It's already done. We did that 100 years ago. So, was this longer than 15 minutes today? Yesterday, I tried to do 4x in 15. It was 4x in 30. Not bad. It was 26 minutes or something. So what is this, 4x in 90 today? Yeah, 90, right? So I hope I have earned your loyalty and respect. I am trying to show you the truth. Okay? The truth. Veritas, the truth through knowledge. Okay? I am technically and legally a Harvard man. Right? So the truth comes from knowledge, and I am trying to share that with you. That's what you need. I don't care what pivot points you use, what moving averages you use, CCI, MACD, stochastics, RSI, Arun, accumulation, all these things are on here are just so funny, right? You're like, oh my God, you know what I'm missing in my life? I need a GAN fan. Let's do a GAN grid. You know what I need? If I only knew how to do a GAN grid, I'd be successful. I can't even draw a GAN grid. It didn't do anything. Let's do a GAN fan. Maybe that'll help. Oh my God, if I only had a GAN fan, now I'd be successful. Okay, that's a fallacy. I can't even get the GAN fan now. Oh, I know what I can do this way. It's a fallacy. Wait, it's not even on here. No wonder I can't grab it. Weird. I don't even have a GAN fan. Crazy. So anyways, no technical indicator is going to do the work for you. You are the greatest value to your trading business. whether you're trading your own funds, we'll call those sovereign funds, right? Your house. Whether it's your funds or client funds, there is no indicator that's going to do the work for you. I want you to fully digest that. Okay? You are the only value. You are it. They are buying you. Investors will not invest into you because of your returns. They will invest into you because of you. They like you, and you have a point of view that seems to make sense. Okay? I did that. Well, maybe I haven't done it in a while. Let's do it this way. Like that. Okay? Cool, thank you. Yeah, we'll start doing that. Okay? You are 100% the reason why they invest. Or if it's your own money, you're the only reason why you invest, right? So you have to have a point of view, and then okay, then you need to carry that out. That's all there is to it. And the tools you use, it doesn't matter. Your decision-making process matters. Okay? So don't get confused. Okay? You like the story of the temptation of Christ. There's the story where he's walking through whatever city he's in. And he's walking down the street, and there's prostitutes and gambling and intoxication all around him. And even worse, I think what they're talking about is capitalist pig dogs selling, T-shirts at the Coliseum and stuff. But anyways, his focus was to stay on the righteous path. And I want you to do that too, where it's very tempting to think this GAN fan will show you the way. That if you only understood MACD, that would show you the way. Or maybe you're using the wrong pivot points. Instead of my pivot points, you should use Willie's or Carmela, or maybe Fibonacci. No, they're all temptations, guys. They're all temptations. And they're bad for you. So I propose that, these are the indicators that I want and need. Okay? I have pivot points, just regular old pivot points. I have 2 of them here, monthly and weekly. I could even throw down some daily on this. Okay, that's all right. It's all right. I know what they are, so they're not confusing. I look at this and I'm done in 1 second. Are these sell zones and buy zones? No, not really. Okay, cool. And price action. I can see the prices. Notice I don't even have moving averages. I don't even have, they are candlesticks. Okay. Okay. Steele says none of them work. Well, I would disagree with that. I think I know what you're saying, Steele. They don't make decisions for you. So none of them make decisions for you. They're simply algorithms. They tell you what you want to know. The problem with most new traders is that they don't know what the indicators are telling them. But the indicators only tell you what you want because you're supposed to know what they tell you. If that makes sense, right? Like, for example, can you draw a MACD right here, right now with this chart? Most people can't. Most people cannot draw a MACD here. But if you understood what a MACD is doing, you could. So therefore, I only use MACD to confirm or deny what it's measuring because I want certain information. And that's why sometimes I'll tweak the settings, because I don't care about the MACD. I want to use the tool to tell me what I want to know to confirm or deny what I'm looking for. You see what I mean? Well, Steele, the only thing I have here are pivot points, so hopefully you're okay with that. You're right, JP? Yeah. Maybe I'm going crazy, but if you're asking me to analyze your charts or help you make a decision, then the answer is no. But maybe we can attack your question tomorrow in tomorrow's webinar, and I can break it down, maybe ask you some questions. Okay? Some people are like, Wayne, what do you think of this trade or the? No, I don't answer. It's not my job. Okay. If you want to put $100 million into a trading account, yeah, we can talk about that. Email it to me. I'm going crazy. Just email me and I'll do my best. I'll try to read it. And I'll try to respond if I can, but I am a pretty busy dude. So, but anyways, I'll try it. I'm going crazy. Okay. Doesn't hurt. Oh yeah. MHB. It's funny. You have to understand. The vast majority of clients are not asking you to trade their money so that they can make money. Okay? That's a very, I know you guys don't like it when I say it, but it's a very poor person attitude. Okay? You will not succeed as a professional institutional trader, for example, by going up to rich people and saying, if they invest in you, you will make them rich. Because that's what you're thinking. If they invest into you, you will get rich. Okay? A rich person's already rich, so they're like, piss off. They can smell it. Like alcohol in your breath. They're like, this guy's drunk. Right? Drunk on my money. So honestly, think about it. Every rich person on the planet has a line of people trying to get their money. Okay? Sucking up to them, lying to them, trying to scam them. Hey, why don't you put some money in here? Let's do that. And I got an offer for you, and I got a deal for you. It's the most amazing thing in the world. There's dozens of people lined up pitching them all this stuff. The funny thing is, those people don't get it because, well, the investor's already rich. So that's not what they're looking for, right? So you have to ask yourself, if someone gave you $100 million, what is it that they're looking for? By the way, that would be a small amount of money for them. I mean, not like insignificant, but they're not giving you their entire net worth. So they're throwing you 100M. You see what I mean? What does that person want? You have to understand your clientele. Right? KYC, know your customer. What is it that they want? I'll make you rich, I'll make you rich. Dude, they just threw 100M at you. Right? So, yeah. So it's a whole different ball game up there, you know. So yeah. If you had 100M, yeah, of course, absolutely. No, you wouldn't, Daniel. Well, first of all, if someone throws you 100M, you're as important as their gardener. You're just a service provider. You understand that? You're just another pathetic hedge fund manager, and they got a dozen of them. And they, most likely, if you don't have the right type of clientele and you don't know how to work with them, if they throw the M at you, they don't respect you. You're a dishwasher. You're like the guy that comes out and washes their Lamborghini and mows their lawn and walks their dog and picks up the crap. You're just like you're just a worker bee. You know? So like you can't behave like that. Otherwise you're just, and they'll treat you like crap. And they'll fire you, by the way, in 2 seconds. They're like, yeah, give me my money back. And it's just a big giant waste of time. Okay? Does that make sense? There's a bigger game, and there's a right way to play it. Otherwise, you're just like everybody else. Just another dirty dog looking for a free bone. Was Wall Street a pretty good example? Yeah, well, that's right, merger arbitrage. Yeah, I mean, sort of. I love the movie. I have the platinum version or something. But anyways, I got to go, man. I've taken up over an hour and a half of your time. So I apologize for that. But hopefully it was worth your time, your investment. There's only 145 people, so it must have sucked to them. But if you could please click like, leave a comment. If you did like the longer version better than the older version, if you just like, or the shorter version, if you're like, oh my gosh, this is what I wanted yesterday, whatever, please leave a comment and let the world know. Right? And in fact, let me know. Because I'm trying to have a positive impact on you. Like Max said today that I was wasting his time talking about a bunch of psychobabble. No, all right, well. What if I thought you all thought that? Then what am I going to do? And then I'm going to cut that out. Yeah, Javier, I'm almost for sure going to do that. I'd say there's a 90% chance I'm going to do that. And hopefully before 2020. Okay? Well, there's a lot of arbitrage. My actual favorite is T. Boone Pickens. Now, he just recently passed away. But he was never successful at merger arbitrage. Well, that's not true. He bought another company, okay, when he was a young man. And he was a wildcatter, but then he thought to get big, he should be in the distribution business, right? So anyway, so he bought a pipeline company. So what he did was he approached them and said, hey, we'd make a great joint venture. I can pump out the oil, we can put it in your pipelines, and we can make a lot of money together. And they're like, go to hell. So he's like, what? They just flat out rejected me. How dare they? So anyway, so he tried to buy their company, and he did buy their company, but they were very hostile, and they threw in poison pills and all kinds of stuff. But he ended up buying the company. Okay, great. So then it works out really well. He was right. It was a really good move. So he goes to buy a second company a year or so later. And once again, they're like, no, you can't buy us. You can't buy us. So what he does is he starts secretly buying stock. Slowly but surely, he's accumulating more and more and more and more and more stock. Then the company goes crazy, like they realize what's happening, like, oh my God, T-Boone's buying up all his shares, and he's going to take over, control through equity stake. Not from buying the company, but by controlling the company. They're like, oh my God. So they're like, boom, and they start defending themselves. But meanwhile, the world figures out the same thing. The world figures out, oh my God, T. Boone Pickens is buying the company. So when one company buys another, they have to buy it at a premium, especially if you're buying up all the stock, right? So you have to buy more shares, or you have to buy all the shares, or a controlling majority of the shares. And to get people to sell you the shares, you have to pay a little more. So if it's trading at 18, you might say, well, I'll give you 22 right now. Okay? So the world figures this out. Oh my God, T-Boone Pickens is cornering the market on this stock. So everyone starts buying the stock because they believe he's going to buy it at a premium. So it goes from 22 to 25 to 27 to 30. Meanwhile, he's bought up a whole bunch of stock at 14, 15, 16, 17. So anyways, it gets to the point where people figure out T-Boone's move. The company doesn't want them to buy it, and they're being all bad, writing in poison pills and all these kinds of things. And so he talks to his traders, and he's like, oh man, so how bad is the situation? We bought all this stock. They don't want me to buy it. And the price has gone so high, I can't afford to buy any more shares. It's not worth $30 a share. I might have bought it at 15. I might have paid as much as 22, but I can't afford it at 30. And they're like, sir, you bought millions of shares of this stock at 14, and it's now $30 a share. And he's like, well, what? They're like, yeah, you're up $300 million profit. And he's like, but I didn't even buy the company. It doesn't matter. Everyone is front running your merger. So you've like quadrupled your money in the last 2 months. So he's like, well, if they don't want me to buy their company, that's fine. Boom! And he dumps the stock. So he's sitting there thinking, well, that worked out really good for me. I wanted to buy this company. I failed at it, but I made hundreds of millions of dollars profit. Cool. So he tries another company. And you know what? The same thing happens. He's secretly buying all these shares. Then finally the company realizes what he's doing. They start freaking out. The press gets a hold of it. They start writing about it like, oh my God, T-Boone Pickens is going to buy this particular pipeline company. And the company's freaking out. And the media's freaking out. And the stock starts skyrocketing. And he fails at that merger. But he makes a couple $100 million. And he does it again and again and again and again and again and again. And he never is successful at actually buying the company, but he makes billions and billions and billions. Oh, we do one every single day, every single day for the last 15 years. So subscribe. Okay, click the little subscription button. Very easy. That's what subscribing is for, man. So anyways, I will see you tomorrow. Peace on earth. May the pips be with you. May your profits be above average. Well, as easier, make sure you click the little ring bell, ding-a-ling-a-ling, because it's supposed to send you an alert. Thank you. Thank you, crazy. Stone cold crazy. Peace out. It was real.